Smart 24 as we drive your business. My name is Anthony Sebale, and I am here to take you through financial markets and what's happening on the financial market scene. Now, one of our top stories this morning is that MTN has announced a dividend to its shareholders. Now, remember, MTN held its annual general meeting on the 27th of May 2022. MTN is the most current IPO, that is a company that has just offered shares to the public for the very first time last year after it decided to go public, according to its directors. Now, MTN paid over 839 billion in taxes for the period ended 2021, according to Mr. Charles Mbire, who is the telecoms chairman, as he said during their annual general meeting. Speaking during the telecom's first annual general meeting as a listed company at the weekend, Mr. Mbire said that the tax contribution cements MTN's commitment to contribute to the development and recovery of the economy, which has been suffering and, grappling with the COVID-19 pandemic and other external disruptions. Now, MTN has more than 21,000 shareholders, according to Mr. Mbire. And he also noted that MTN has aligned its business priorities to focus more on environmental, social, and governance principles. During the annual general meeting for the company, MTN also announced that 335.6 billion will be paid out to shareholders as dividends for the period ended December 2021, with a per share price payment of about 14.99 Uganda shillings. MTN remains one of the largest taxpayers and one of Uganda's most profitable company. Mr. Mbire indicated that at least over 230 billion Uganda shillings has already been paid out as interim dividend. Now, in 2021, MTN offered 20% of its shares to the public in what has since become the largest initial public offer in Uganda's history. However, the initial public offer was undescribed, which was largely blamed on a slump in the economy due to the COVID-19 pandemic in the country then. The telecom raised over 561 billion Uganda shillings, which was below the target of over 910 billion Uganda shillings. Mr. Mbire said that whereas 2021 was a challenging year due to the impact of COVID-19, MTN had demonstrated resilience, returning positive results as at a time when most businesses were counting losses. During the period, Mr. Mbire, the chairman of MTN, said that MTN had successfully separated its e-commerce and financial technology business from telecom communication services, a requirement that is now provided for under the National Payment Systems Act. Now, the Act effectively transferred regulation of the mobile money services from the Uganda Communications Commission to the Bank of Uganda. In the first 3 months of this year, MTN further demonstrated a strong profit position, reporting that pre-tax profit had risen by 20.2%, growing to over 143.7 billion Uganda shillings, boosted by a massive increase in the revenues from internet connections, which ballooned 115.65 billion Uganda shillings, or 45%. That is a story right there coming in from MTN Uganda, with over 14.99 shareholder profit as dividend. So we are going to keep our hands on the story that MTN is doing very well, and we shall also be looking at the shareholders themselves and how they are reacting to this dividend. Remember, their annual general meeting happened last Friday on the 27th of May, and they approved a dividend of 4.706 per share in terms of dividends. That is how much each shareholder is going to get for every share they have in the company. And MTN has, initially, been the first company in Uganda to have an electronic IPO, not only in Uganda, but in Africa and in East Africa as well. So MTN has a good, promising future right there. And the blue closure date, that is the date for which you have to buy the shares so as to benefit from the dividend, is tomorrow, the 1st of June. By the close of business tomorrow, you will not be able to actually take part on the dividend. That will be what that was announced earlier. And as you have seen, the price this morning to buy a share at MTN is 191.83. That has been rising from about 185 through 188, now to 191.83. So if you want to take part in the dividend entitlement, if you want to be entitled to a dividend at MTN, better buy your shares before close of business tomorrow, so you can actually take home that dividend right there. Moving on to another story, the government suppliers now will only pay value-added tax after their invoices are cashed. Now, goods supplied to government will, beginning July 1st, not be subjected to value-added tax before their invoices are cashed. Now, the policy shift is contained in the new tax amendments of 2022 that were passed by Parliament of Uganda, but still awaiting to be signed by the President of Uganda. Speaking at the weekend, Mr. Robert Wamala Lumanyika, the Uganda Revenue Authority Public and Corporate Affairs Acting Manager, confirmed that government suppliers will only be required to account for value-added tax on goods and services that have been paid. Now, previously, he said that government suppliers would expect to account for value-added tax at the point of delivery, invoicing, or payment. Now that change is for those who will be supplying government, they will only account after government has paid. This is basically to help businesses not to pay when they have actually not received their money, because it ties up their capital, as he added, noting that this is a good initiative and will help suppliers to free up capital. Now, government holds up to 2 trillion Uganda shillings in domestic arrears, some of which have gone for more than 5 years without being paid. However, about 700 billion has been paid, with government committing to fully clear the money due to suppliers in at least the next 5 financial years. Speaking last week during a workshop on high commodity prices, Mr. Ramadan Gowi, the Finance Ministry Permanent Secretary, said government has committed to clearing domestic arrears, warning ministries, departments, and agencies against procuring goods or services without paying for them. Now, the shift, analysts have said, will save suppliers from having to mobilize for money to pay value-added tax whose payment has not been received. Speaking during a tax and budget engagement last week, Mr. John Jet Tusabe, the BDO or tax advisory director, said that although the policy had not been included in the tax amendments presented by the Ministry of Finance, Parliament had seen it important to include it after concerns, especially for government suppliers. Cash accounting for supplies to government, he said, had over the years presented challenges to taxpayers who supply government. Now, Parliament had the cries and decided to do something. This is important because once we have, you have invoice government after making a supply, URA expects you every 15th of the following month to account for taxes on the basis of the invoice, yet government ministries, departments, and agencies can take up to 6 or more months without paying, that he said. Previously, he added URA would be on suppliers' case to account for money that they have not received, going to the extent of instituting penalties such as accrued interest, among others. That is a story as well right there. Coming in, if you're a government supplier and you have been facing challenges of being, demanded tax before, invoice clearance, now you are free according to this new regulation. So unlike before, when government suppliers were expected to account for their value-added tax at delivery of the good or service to government, invoicing or payment, the shift means that they will only account after they have been paid, so as to actually not harm their capital for their businesses. That is a new development right there, and I think it's a good idea because I know very many suppliers who have been supplying government with goods and have not been paid, and yet they have to pay all these VAT taxes and so on, and other taxes according to Uganda Revenue Authority regulations, and it has been, pressing them so much. So I think that development is a good one, and probably we will see a little bit more of that in other sectors as well, so that actually people can benefit from people can benefit from supplying to government and not be pressed down. In another story, the Nigerian banks, that is across the West African countries, Nigerian banks face global risk transmission despite the oil boost. Now, Nigerian banks' operating environments could deteriorate in 2022 to 2023 as adverse global economic conditions feed through the local economy. Now, Fitch Ratings says in a new report, soaring inflation led to the Central Bank of Nigeria to raise its benchmark rate by 150 BP on 24th of May. And the pressure on banks' profitability and asset quality will be higher than we had initially expected for the year 2022. However, the sharp rise in the oil prices this year will mitigate the economic impact from the global risks, and they do not expect Nigeria's banking sector to experience a material shock. Now, high inflation and a potential economic slowdown will put pressure on borrowers to the detriment of the bank's assets quality and, of course, their asset management. Inflationary concerns led to the Central Bank of Nigeria to raise its benchmark rate by 150 BP to 13% on the 24th of May. That is a high percentage right there. Remember, in Uganda, we've just talked about our 6.5, which was dropped from 7 around September last year and has been maintained since 12th April, since the last policy committee meeting. And of course, we are looking towards the next policy committee meeting, which is going to sit on the 16th of June. But ours, we are still talking about 6.5. Nigeria is currently standing at 13% central bank rate, which is a whooping high central bank rate, according to the reports. Now, the first increase was, since 2016, it has been the first increase to 13%. And this has been, something new and novel to the economy of the country. Now, we expect interest rates to increase further given accelerating inflation and tighter global financial conditions. This should support the bank's net interest margins, which have been dented by low interest rates in the recent years. Now, as a major oil exporter, Nigeria should see a boost in its economy and financial reserves from the current very high oil prices. Since Nigeria is a chief exporter of oil to very many countries on the African continent and of course abroad across the globe, we expect them to benefit actually from these recent rise in oil prices. However, the low production and high import costs of refined products and the need to subsidize households and businesses will limit the benefits. Now, for banks, the most pronounced benefit of higher oil prices is decreased pressure on asset quality. Now, oil prices and Nigerian banks' non-performing loan ratios have been closely inversely correlated in the past, reflecting the outsized exposure to the oil and gas sector in loan books and the Nigerian economy's high dependence on oil revenues and the spillover effects from oil to non-oil, sectors. That is a story coming in right there from the Nigeria's central bank rate that has been raised to over 13%. Remember, all these increments come as a result of the, increasing commodity prices, or that is the inflation that is being experienced across the globe, and of course food insecurity all across the globe, as very many countries are struggling to keep up with the dollar that has been strengthening since the beginning of the year due to probably the scarcity of the dollar, as the central bank rate of United States also increased its rate, and that meant a lot of money that was actually in circulation is not as much as it used to be due to that high rate. So all these factors come in and actually influence these central bank rates, and they have been putting on a lot of pressure so that they can actually produce results despite the tough economic times that we are living in. Despite all this, the central bank rate in Uganda has still been maintained at exactly 6.5% and is still at that until the meeting for the policy committee of Central Bank of Uganda, which will be held on the 16th of June, to see whether we increase this rate or we maintain it. Now, we have a lot or more coming in from Central Bank, and we'll be giving you more later on in the program. But to remind you about the annual general meetings before we go into our break, there's several companies are going to hold their annual general meetings very soon, and among them is of course Stanbic Bank Uganda. Stanbic Bank Uganda has been listed for quite long on the Security Exchange and has been one of the most profitable companies listed. And according to the reports from the financial reports that were released, according to CMA, of course, and the Capital Markets Authority and the USE, Umeme and Stanbic were maintained at a very high profitability, and of course they declared a greatest turnover, with Stanbic coming behind Umeme. So we are looking to their meeting to look at their financial results for the year ended 2021, December, as well, and see if they declare any dividend. Remember, the central bank, told all banks actually to withhold a dividend. All listed banks are to withhold a dividend to their shareholders. And we don't know exactly why, but they claim that this is to control inflation and, uncertainty of the economy in these very tough economic times. So Stanbic has not declared a dividend, but they will answer probably during their annual general meeting, which you should catch virtually. You go to their website at stanbicuganda.com, and you actually will see the information that is required for you to attend their annual general meeting. Other companies that will be holding annual general meeting, according to reports here, there's British American Tobacco as well. British American Tobacco will hold its annual general meeting on the 15th of June, a day before the policy committee meeting for Bank of Uganda. So on the 15th of June, British American Tobacco will be holding its annual general meeting, and the book closure date will be 20th of June, 2022. And of course, the dividend payment date will be 11th June and July. And they have declared a dividend which is subject to approval by shareholders to the meeting, a dividend of 209 Uganda shillings. That is British American Tobacco. Wumeme already held its meeting. That was on 19th of May. That was a Thursday, before last Thursday. That they held their meeting on 19th of May, and the book closure date is the 24th of June, Friday, 2022. And of course, the dividend payment date will be 22nd of July, 2022. Wumeme declared a dividend of 54.1 Uganda shillings to its shareholders. So these are all the things you need to keep updated on. Uganda Clays Limited as well will also hold its annual general meeting on 29th of June, 2022. And they have declared a dividend to be paid of 1.5 Uganda shillings. So that and more, we will be keeping you informed. And remember, this is Financial Markets, and my name is Anthony. And now next, we are going to talk to Mr. Andrew Mwima, who is the trading manager from the Uganda Securities Exchange, to give us a little bit more insights of the facts behind the share prices that we have seen over the last couple of days. Don't go anywhere. We'll be right back. Yeah. Very good, very good. Yeah. Good one.
No, twagala kozesa
wait, can we use on
you can't. No, naye tujagala. Anyway.